The following is a required advisement of our legal disclaimer. All information provided herein is published for educational purposes only, and should not be construed as investment advice. None of the time freedom trading content on any site, nor courses, nor other publications is a promise or guarantee of specific results or future earnings. We do not offer any financial investment nor trading advice of any kind. Our content is published exclusively for educational consumption. We are not an investment advisor, financial planner, nor a registered broker. No offer to buy or sell any instrument is being made through any of the content presented in the time freedom trading material. No profitability or performance claims of any kind are being made. Trading in any manner is a high-risk, speculative activity. It is strongly advised that you consult with a registered investment advisor prior to making trading or investment decisions. Past performance is not necessarily indicative of future results. We make no profitability nor performance claims of any kind. All information is published for educational use only. We do not purport to tell or suggest which securities customers should buy or sell for themselves. Our owners, employees, subcontractors, colleagues and/or affiliates may hold positions in the stocks, currencies or industries discussed herein. You understand and acknowledge that there is a very high degree of risk involved in trading. It should not be assumed that the methods, techniques, or indicators presented in these products will be profitable or that they will not result in losses. No representation is being made that any account will or is likely to achieve profits of any kind. Generally, expected retail trader results are that all traders lose money and do not become profitable, regardless of the training they receive. Trading is a high-risk speculative activity and there is significant risk of financial loss involved. Trading involves a substantial degree of risk and may not be suitable for all investors. It is strongly advised that all attendees of time freedom trading courses practice the concepts taught through paper trading, and trade in a simulated trading environment only using a demonstration account where no risk of live capital may be incurred.
What I had laid out for today, which I thought would be helpful, is kind of paint a picture for what we're looking to do for next year and make sure that we're presenting the information for your trading plan specifically. We've got a few things that are going to be new for next year. One is using the Trader Notion workstation to log and build our Catalyst calendar, etc. But I want to make sure we're all on the same, what I would call placemat, as to your development in 1 year, in your first year of trading. And the idea is, what is that pathway to profits? Many of you have come from prior trading experience. The reason why you signed up with me is you want to know what works and what doesn't, and to be successful at it. And so my goal is to make that glaringly obvious for you, what that path is, what it looks like, and then subsequently help you undo some of the bad habits you've developed or where you've failed in the past and call those out. I had a conversation or an email last night that I thought was quite eye-opening, which was the students who meet with me regularly once or twice a month are progressing faster than those who don't. And so, the market is experiential, and you get out of it what you put in. And so, there may be some thought processes that are affecting what you think is important and what isn't, but spending time with me and making sure you're seeing charts the way I see charts is critical for you being able to see the market. And I think you'll see it in this trading plan and the layout that we'll go through. So we'll dig through that. I've got a couple questions that I'll answer in detail, and then we'll pick our heads up going into 2025 for what we kind of see as the market ahead. And again, this is not designed to be a class. This is really designed to be office hours for questions and answers and discussion amongst the cohort. So I hope this format is helpful, and we'll continue to adjust and get better as we go forward. So let me dig into kind of the framework of what many of you have learned this year, and make sure that we're not leaving any gapes or holes, but subsequently know kind of where you're going to. And there's kind of two parts to this framework. One is you're building a process to be consistent. And in order to do that, you've got to practice. And from that practice builds proficiency. And from that proficiency, you can measure your performance. And only then do you learn to develop some level of progression. And the challenge is everyone, because they have a keyboard in front of them, can hit enter and think that money will just show up in their account. And I say that with a twisted lip, in the sense that everyone says, no, that's not how I think about it. But when you look at your behavior and you look at what you actually log and do, that is what you're doing to a certain extent. And so I want to put a very succinct and methodical framework in front of you that you can check the box to make sure you're progressing correctly. And that is this 1-year trading plan. And the goal is to be able to line out and understand what level you're at, right? From a process perspective, because to be consistent in the market, you have to have a methodical process, because emotions and greed will take over. And so the first part of this is you have to be able to see the market correctly in order to then trade the market, and then in order to scale. Now, everybody wants the money. They want the big home runs. They want to chase the melt-ups like we had on Friday. But you've got to put the correct things in order to enable those results to show up consistently. Not just once, not a couple of times, but you measure your performance based on what you do in 100 trades, not one trade. And so the first step that I've taken many of you through this year is, how do you see the market? Setting up your trading workstation, your accounts, your subscriptions, your data, getting access and navigating the content in the on-demand course. I can't tell you how many students have not went through just the content that's just in the course itself. And I spend a lot of time reviewing material that's already in print and it should have been reviewed in the course itself. So make sure you take the due diligence, if you will, to go through that material and content. But many of you should have your workstation set up. You're at different levels. Some of you haven't gotten IBKR up and running yet, and that's fine. You're still learning the basic mechanics of chart reading, which is great. But that box needs to be checked in order to move on to configuring your monitors and the charts, as well as the broker, and making sure that they're integrated correctly. And that's critical to setting up your paper trading configurations. Now, I know paper trading is not perfect. Many of you have said, hey, my stop loss isn't working, etc. The goal is to get you familiar with the process. Unfortunately, IBKR and many of the systems out there do not trigger based upon real trade volume. So your order is not affecting the transaction or the action in the market, if you will. The goal is to get you familiar with navigating your broker's tools and then being able to functionally get in and out of a trade without damaging yourself or attempting that with real money. So the paper trading configuration is at a minimum a process of getting you familiar with the software, of what it will feel like with real money on the other side, but subsequently realize that it is a limitation in the design. The net of it is you can always get in and out on a market order. When you go to real money, I do not want you trading on market orders, because you will be suspect to slippage, especially like events like yesterday, because with the high volatility and the increased bid-ask spread, you become a victim. You think you're trading and getting into a profitable move, and then you get hung when the market goes sideways and you can't get out because the market maker moves the bid-ask spread on you while you were in the trade. So we want to be aware of those sensitivities. The other key piece that some of you are doing really well and some have not put the due diligence into it is developing the market journal. Now, we've done that in a manual fashion this year between online applications like Evernote or using PowerPoint. Next year, we're going to lock in with Notion and have our qualitative and quantitative information in one place, which will be really cool. So I've shown many of you that, but that's coming forward. The third piece of kind of being able to see the market is making sure your drawing tools are set up and consistent. And then having your watch list, and as well as developing a market monitor. One of the things that I think many of you have now discovered is the importance of seeing the market in 3 dimensions, which is what's happening at the index level, what's happening at the sector level, and then what's happening at the stock level. And there are certain market indicators, or internals as we call them, that you want to know what is happening with the market breadth, with the advanced decline line, what's the volatility in the market, what's the 10-year doing, which impacts the market. All of those things are important into understanding what is the trend, if you will, for the day, and will those elements impact the weather, as I like to call it, right? What's the barometer for the charts we're looking at? And so if these 3 things are not complete and robust from your development perspective, it's very difficult for you to move forward effectively in trading the market in the second step. So I want to make sure that in our one-on-ones, we're checking the boxes in these areas so that you now have a firm foundation of what it is you're supposed to see. You're seeing the charts correctly in the proper view. If you're on, 22-inch monitors, you're going to struggle at this. The reason being is you're not seeing all of the support and resistance areas that are possible to you from a trading perspective. And those things are critical as we look at price action in addition to the indicators. We do not just trade off of the indicators. Couple other comments on that. The trading workstation as a whole should be something that you set up as a robust environment. I know many of you have had monitors fail, have had technical issues, and if you want to replace your income with something like this, you want to be sure that you have a robust platform that is technically solid. And so having an APC to protect your power, having your internet connection correctly, all of those things from a backup perspective should be applied, because you don't want to have an opportunity where Murphy's Law can take over and you're in a trade and things go down. So all those things are critical at the foundational stage. To see, once you can see the market correctly, now you have the ability to execute trading the market correctly. And what we've defined in this course for everyone starting out is to learn the good habit of being able to trade the index, or the QQQ. There is plenty of volatility in the QQQ to get to 6 to 7 figures. We've specified a specific trade setup. We've identified the chart patterns, and we'll review those again today. And the goal is to be able to do that, or look for that edge succinctly and consistently, and only trade that edge. And the challenge is we get confused with wanting to get in on the market running when we don't have an edge in placing a trade, right? Now, one of the things we've learned is that, hey, there's a move and then there's a trade. The trade exists inside of the move. And so if you're chasing a move, your edge is not there. And we have specific criteria that we use to be able to do that, specifically to be able to measure the volatility in the chart before we place a trade. And that is critical for you to becoming successful and consistent. The second piece of being able to trade the market is putting your data in one place. So now it becomes a specific feedback loop, right? You've heard the phrase, what gets measured gets managed. And so we have to put these three elements in place in order for you to manage your trading and to grow. Specifically, how are you logging your trades? Secondly, what is the trade journal that you're using, and what is the level and depth of content that you're creating in that, or curating is really what it should be, specifically around what the market is doing, what you're doing as a professional, and then secondly, what your trades are doing. And then the third piece of this is really understanding the statistical analysis of your trader's triangle. We want to understand what your expectancy is specifically. And so we're going to give you the tools in 2025 to be able to measure that and manage it specifically. And this is critical. This is what separates the professionals from the amateurs or the retail traders, because they are not analyzing their data over 100 trades. They're just remembering the winners, right? And they're not addressing the losses because of the emotional pain they cause. And so you've got to run to your losses and understand that those things are critical to your development. And then the other piece of trading the market and why we're practicing first is so that we know what our discipline is around our daily market routine. Are we trading some days, or are we trading when we're supposed to, which is when we have a catalyst? Or are we trading when it's convenient? And that specifically is going to dictate how your performance is for the year, right? There's probably 10 days a year where you'll have, exceptional moves. I saw Jim Cramer's comment yesterday about what happened in the market Friday, and he called it an exceptional day, which I thought was funny. And so the takeaway is that you've got to be able to manage your trade data with discipline so that you have clean data and you have a reliable feedback mechanism for your performance. And then lastly is, what is the level of self-assessment that you're doing? And we're going to give you some tools today to talk about that as you move into what you've done from 2024 and move into 2025 with some areas to work on. And then the last piece, which is what everybody wants, is, okay, well, how do I get to the money and how do I scale the money? And so that leaves us into kind of the money management process for, do I trade stocks and options? You have been given the tool for the 1K way performer, which kind of removes the uncertainty of how much should I trade? How do I compound? How do I consistently use my leverage? And then what are the trading tactics we're going to use within the 1K way? Those things are applied specifically to kind of remove some of the concerns and confusion and simplify the process. Trading should be very, very boring, right? It's exciting when the money shows up, but the process and the system should be very boring on a day in, day out basis. And so we want to be able to make sure we have a effective money management system that is not based on emotion or greed and allows us to be able to trade accordingly. And so as we look at trying to master this, we want to figure out what is the way that we grow from paper to real money. What's the logical process and incremental process to take us from plateau to plateau, so that we're not, using a gym example, are we lifting more than we can hold, right? Or lifting too much weight. The other part of it is we want to make sure we're consistent in building our financial flywheel so that when we do trade, we're effective and we're using the proper leverage to grow our accounts. The one thing that I've seen a lot of traders do, and I've done it in the past as well, is when we get into the term funk has been used lately, of where we're having, we're missing trades, we're not performing well. And because of that lack of confidence that comes, you start messing with your trade size. And you say, oh, well, I'm just going to trade 5 contracts, when your trade size should be 10 or 12, right? Where you're at on the 1K way performance. And that ends up having or becoming a double negative against you, because when you're right, you're not applying the right leverage and growing your account like you're supposed to. And so that hesitancy or inability to follow the process inhibits your financial flywheel. And that really gets us into digging into or getting under the hood of what is your expectancy in understanding your data and how you're truly performing. I can't tell you how many traders I've talked to over my career who think they know their trading performance and they can't tell me their average loss, or they can't tell me what their batting average is because they don't log it. And they're like, well, last month I logged it, but this month I don't know, right? And that lack of consistency, and then you are dependent upon your broker's tools to tell you how you're doing. I have a rude awakening for you. Your broker's tools are not incented for you to make money. They're incented and they're built to help you trade more, not become more profitable. And so hence why we have to use specific tools that we do within Time Freedom to be able to move forward with that. And then the last part of this is really the most important, is putting in place the proper mental models with your mindset and being able to address loss aversion. We talked about last Sunday in class the specifics around the best loser wins and what are the dynamics that we need to understand and look into our analysis of how we address losses, because the smallest loss is the best loss and they are a cost of doing business. And we as humans have loss aversion, or we are physically built to be able to avoid pain. And you have to get your head around how you respond to that and then dig into how you trade around that behavior. And lastly, you can assess how you're approaching trading as a professional or an amateur. And there are specific criteria that you want to look at in your behavior and self-assess and saying, hey, what are the amateur traits that I'm doing and how do I correct those? We're going to talk about today the mental game of trading in the book and some of the exercises that they use in detail. And I'll take you through kind of my journey of where I came from and how I've become successful trading, and then subsequently being able to create a system that I can teach others to be effective at as well. So this is your placemat for your process of development. And so you should be able to go through and check the box in those areas and figure out where you're at and where you're lacking. And I will work with you one-on-one in our sessions to make sure that as I log into your computer and I can see your screens, I can see your charts, understand what it is you're doing and what you're missing, if you will. Because that feedback or that closing of the gap is the most important part of your development, so you're not continuing to repeat the same mistakes for an extended period of time.
I believe we're gonna take today, certain that the world won't stop revolving while we play. So player come in.